Did recent changes affect labor law information about overtime regulations? In recent days, significant changes in labor law have caught the attention of many workers and employers alike. The question on everyone's minds: did recent changes affect labor law information about overtime regulations? If you are curious about how these updates may impact your paycheck, you are in the right place. Let's break down the latest developments that could change how overtime pay is treated. On July 4, 2025, a new federal law was enacted that introduces a temporary deduction for eligible workers. This deduction applies specifically to the premium pay earned for overtime hours worked. The premium pay is defined as the amount paid above the employee's regular hourly rate, which is outlined under Section 7 of the Fair Labor Standards Act of 1938. For instance, if an employee earns $15 per hour, the overtime premium, which is time and a half, would be $7.50 per hour. Only this premium portion qualifies for the new deduction. It is important to note that this deduction does not apply to tips or overtime pay mandated by state laws or collective bargaining agreements that exceed federal requirements. The deduction has a cap of $12,500 per year for single filers and $25,000 for married couples filing jointly. However, it phases out for higher earners. For every $1,000 of modified adjusted gross income above $150,000, the deduction decreases by $100. This could eliminate the benefit for those with high incomes. This temporary deduction will be available for taxable years beginning after December 31st, 2024, and before January 1st, 2029. Employers will also need to track and report qualified overtime compensation separately on employees from W-2 starting with the 2025 tax year. Previously, overtime pay was not identified separately on these forms. The Internal Revenue Service is expected to provide further guidance on how employers should adjust withholding and reporting for overtime pay and tips. Even with this new deduction, overtime pay will still be subject to Social Security, Medicare, state, and local taxes. While the fundamental labor law standards regarding when overtime pay is required remains unchanged, this new tax incentive could affect how overtime compensation is perceived by both employees and employers. Understanding these recent changes is essential for compliance with labor and employment law and effective payroll management. Stay informed and make sure you know how these changes might impact your earnings and tax filings in the coming years.